Alright, welcome back to day 7 of our $100 day trading challenge. It's Friday the 27th, 6:26 a.m. Pacific time zone. We had first news event come out at 5:30. Second news event comes out at 7. The New York market spot open right here at 6:30. Our bias is bearish. We have the new day opening gap from yesterday. We also have equal lows, lots of equal lows down here. And our other new day opening gaps, new week opening gap, all beneath price. Here we see retracement at the fair value gap, doesn't even touch the midpoint. If we can stay under this midpoint, that's going to be a good sign. Alright, market just opened. Price is moving, but I'm going to be patient. I'm going to wait for some type of retracement besides this, because this one went above the 50% mark here on this blue fair value gap. So I need a better sign for entry. Alright, I'm going to go ahead and enter right there. So this is my entry here. Again, I'm targeting these equal lows down here, right beneath the new day opening gap. It's a small risk to reward. I'm not risking too much. And the reason for that is that we already had this move down to the new day opening gap. So price could just come back up and take us out. My stop loss is right here at above the halfway mark of the gap. So it's not the safest stop loss either, because price could also just fill back up this whole gap before continuing down. I'm gonna go ahead and move up to break even here to eliminate the chance of a loss. Firm. And here we come down to our take profit. Take profit hit. Nice. So that was just a little trade right there. Little $43 profit. It was a 1 to 1.84 risk to reward. So to recap that trade, I could have found an entry up here. I could have found the entry because up here I said it passed the 50% mark. That's why I did not enter. But if you can see, it dipped right into the one above it, touching that black one above. And we touched below that 50% mark on that one. Right here. So that could have been my confluence to enter. But even with that little touch into fair value, we had big candle down. So if I had waited for that candle to close like I normally do, our entry would have been even lower. So it wouldn't have been good risk to reward here. That's why when price came back up into this fair value gap, I marked out the midpoint, stop loss above the middle, and I entered. I entered early actually, because on this candle, I entered before it even closed. So looking back, I need to be careful with that. I shouldn't be entering before the close of the candle. But trade played out the way I thought, hit my take profit. And let's see if we can find another trade for today. We got a volume imbalance right here, right next to that new day opening gap. That would be a good entry point for a stop loss above the gap. Here. We also have fair value gap right above that, so we'll see what we do on this. Could use that gap for an entry as well. Yeah, this gap right here, which will put our stop loss above the gap. Alright, I'm gonna enter right there. We have consequent, or the middle point right here, got touched into. Consequent encroachment is what it's called. That's what ICT calls it. This one we're risking 47 to make 72 potentially. Targeting these equal lows from 4:13 a.m. And I can actually move my stop loss down a little bit. I put it a little high. Move it down to there. So risking 43 to make 73 potentially. I'm gonna go ahead and move my stop loss up to break even again. so that we can't lose any money on this trade. So now our trade looks like this. No risk, only reward. If we come back up here, we get stopped out. No losses, no profit. If we come down here, we make our profit target. We're risking, even if we lose the trade, we'll make $1.74. And if we hit our trade, we'll make 73. Yeah, we came up to break even. Stopped us out. You can see profit 6 cents. Yeah, so there's a potential entry point. Depending on how we react here, we could find an entry. This would be the ideal time to find one, right before news comes out. Then news can take us to our take profit. Comes out at 7, orange filter. We touched just into this fair value gap, just barely. Here we touched the middle, here we touched just barely inside. Now we're coming back down. So I would enter off of this. We got lows right here. And then our lows down here as well. I would enter, but I see that big wick right there. Most of this candle is made up of a wick. So that shows it got rejected down here, coming back up. So I'm gonna wait and see if price actually wants to move in my direction. Because right now he's still jumping around up here. Alright, that's a good close right there, beneath the midpoint. So I just entered for my second trade. Entered right there. Stop loss above the fair value gap. If I wanted to, I could bring it down to 50% of the fair value gap. And I'll bring my stop loss down once we're in a little bit more profit. I've been liking going to break even on these quick trades, especially after I already have my first win for the day. Then I can secure profit. Here, so we filled the volume imbalance a little bit with the wicks. Started to come back down. This is when I would move my stop loss back to break even. So again, can't lose any money on this trade now. Worst case scenario, I get stopped out at $0. We see a little fair value gap up here. So I'm gonna move it up just a little bit. That way, even if we come back into this fair value, we'll be okay. We filled above halfway on this fair value gap. So I would not enter here, not on this candle. I want to see a retracement to fair value beneath the halfway mark. We got 1 minute till news. It's about to come out. Okay, news came out. The next fair value gap I'm looking at is right here. If we can see a touch beneath the midpoint, that'd be a good sign for a move down. Alright, so we just got stopped out of our first trade that we entered. Our second trade, technically. But we got stopped out at break even, so we didn't lose anything. Right here. We lost $1.50 on that one. So news pushed price back up. On this trade, I was expecting lows from 4 a.m. to get hit. Because on top of that, we had another newly opening gap farther beneath price. But we have this one that's closer from yesterday. So I think that's what's drawing price back up. We have these lows created though. So there's a potential target right here. So right here we touched into this fair value gap beneath the halfway mark. we can see movement down, we can enter. Go ahead and enter right there. So this is a 1 to 1.3 ratio, risking 23 to make 30 potentially. Once we get farther down to this area, I'll bring my stop loss up to break even. So I just added another position to the order. Right here. What I saw is came up into this fair value gap underneath. Same thing, beneath the halfway mark, closed downward. So that's where I entered. The second trade is risking 24 to make 21. So it's slightly less than a 1-to-1. The risk to reward is not great on that one. Could have been better. These are my two positions. So basically I took off my take profit on that shorter trade. I'm going to let this one ride out and just stop it out when it starts to come back up. I'll stop it out at break even. Worst case scenario. Alright, yeah, so this first trade got stopped out at break even. That one just closed. We're back into our fair value gap down here. Based on what it does here, I'll probably just close my position if it comes above this halfway mark. came above halfway. When this candle closes, if the body is above the halfway mark, I'll just close out of the trade. Yeah, body's coming up. Yeah, I'm gonna close this trade on this candle close. Alright, just close this trade. And I'm done trading for today. So, it looks really like a lot of trades. I normally don't trade this much. You can see that first trade was $43. This is the first one from today. 27. Made 43 profit on that one. Next trade stopped at break even. Next trade. This was also break even. These two were both stopped at break even, so overall I lost $1 in the spread on that one. And then on these two, I tried to take another trade. This was the same move down. This one again stopped at break even. The spread, it was $6. And this one, I just stopped out because I didn't like how it was moving on that fair value gap. I think it's going to come up higher. So I just went ahead and closed that one. Alright, let's recap the results from today. So here we see all the trades we took today. We can see our first trade, $43, and after that, break even, small loss, small loss. So what I learned today is overtrading. I overtraded today. I took 5 trades. Normally I keep it like maximum 2, maybe 3. And sometimes I don't trade at all depending on if the price action is bad for that day. So going forward, not going to take as many trades in one day. I'm going to just have confidence in the first and second trades. On top of that, it's Friday. And after the second news event, after 7, those are the trades that didn't hit. So Friday is a slower day of the week than Monday, Tuesday, Wednesday, Thursday. So I shouldn't have been trading as late when there's no news event after 7. So that's what I learned from today. Overall, we made $20 today. $22 profit, which puts us at 6,321. So we need 160 more and then we pass the account.